Global stocks falling on Tuesday as oil prices pull back. We're also following earnings from Home Depot, an important consumer stock. Let's bring in Jasper Lawler, a market analyst with CMC Markets in London. And Jasper, let's begin with Home Depot beating estimates on the top and bottom lines for the fourth quarter. Of course, not necessarily surprising as wages rise.
Hi, Scott. Well, absolutely. The expectations were already reasonable for these Home Depot earnings, but investors are reacting well to these set of results. Same-store sales in the US up 8.9%. You can see that the company is really benefiting from the strong housing market in the US. House prices are rising. Low interest rates, as you said, spurring that house buying. And as people buy houses, naturally, you want to do them up a bit. And Home Depot really reaping that doing up your house mantra that's taking place in the US market at the moment.
So when we hear all these headlines of a recession is coming and, things are about to really turn south, and you look at Home Depot's quarter and you say, well, seems like something's going right.
Well, absolutely. And I think when you talk about, say, the retail sector, where retail sales have been a bit sluggish in the US, a bit less than you might have expected given the drop in gasoline prices, certain areas are weak. We got Macy's results expected. A lot of people are not spending on clothing the way they used to. Clothing sales, the prices are down. Sales are coming down with them. But people obviously are choosing to spend on their houses. So I think it's not an entirely true story to say that sales are down and everything. It's really dependent on the area you're focused on. And I think the DIY, doing up your house sector, is one of those that's really picking up steam.
All right, let's shift back to the broader markets. Of course, we still have oil prices dictating stock prices. What does that tell you about the strength of the stock market that we're in?
Well, to me, the fact that we're leading higher from the energy sector, from the mining sector, these sectors that were the most beaten up over the last month or so, obviously, indeed, looking back over 18 months, tells me that the standing, the legs that we're under in this rally are perhaps not as strong as we'd like. Really, what you want to see is new sectors coming forth and outperforming, showing some growth going forward. To me, the fact that some of the most shorted stocks are the ones taking us higher tells me that it's a short covering rally, and there is risk, even if it's not immediately, for a substantial pullback.
All right, so if this rally isn't as stable as, of course, we'd like it to be, what levels in the S&P 500 are you watching?
Well, on the downside, the comfort that we can take here is that the S&P's held that 1800 level, about 1800 to 1820. That was key multi-year support, and it's held there, and we're rebounding off there, and we've taken out that 1900 level. So really, I think on the top side, something that could offer some resistance to the price is the 2000 mark, just that round number, and we've got the 200-day moving average not far above, and the markets could start getting a little cautious, and that's really what happened in the last rebound. Is that we ran into problems before being able to take out the highs, and obviously ended lower again. So that's the risk going forward.
All right, Jasper Lawler, a market analyst with CMC Markets in London. Jasper, great to see you. Thanks so much. I'm Scott Gamm, and you're watching The Street.